All right, so let me get the screen shared and we will get going with our risk management lesson. So, guys, most of you, I think I know everybody in this chat pretty much, or I've at least talked to you. Risk management. What is risk management? Basically, risk management is making sure you have rules in place, things like that. Um, you can say you're a trader, but I think we're more in risk management than anything. Because if you don't manage your risk, you're going to lose all your money and then you can't trade. So, first and foremost, we are risk managers. Now, I put novice in here because eventually I will be giving this presentation to more people, hopefully. I'm not calling you guys novices, you know that. So, we're going to talk about risk management. I gotta get this Zoom thing out of here. Okay, there we go. So why is like risk management important? Like I said, you can't trade without capital. And if you don't have risk management, you won't be able to trade because you will blow your account eventually. How many of you guys now? I want this to be kind of interactive. So like please don't ask the question, like please type. It would make this a lot easier, a lot more fun for me. But how many of you guys like when you first got into trading, you got into options and things like that? How many of you made money like immediately? Like the first time you took a trade, you made money and you kind of looked around and you're like, well, this is like pretty easy. I think I can do this. And then what happened when that euphoria wore off, when you didn't have the rules? You probably lost all the money you made or more, right? Spend months trying to do it. Yeah. So you make the money. Everybody, when they start trading, whether you're following signals or whatever, like being blind is almost awesome when you first start trading because you just get this like the beginner's luck. It's such a curve, and then it just like reality sets in, and then you tilt. Yeah, we'll go over tilting a little bit. That'll be more of a psychology lesson, but we'll go over tilting a little bit. But yeah, so like same with me. I made money, but then I lost it, and then I started losing like my real money because I was just like going in, going out, didn't really know what the hell I was doing. I could read a chart, but I didn't have rules and I didn't have risk management. So like I was just going in blind. And it also promotes consistency. So like if you have these systems in place to manage your risk, you eliminate what we call the human factor. So the human factor is this thing right here that works when it wants to, doesn't work when it doesn't want to. Some days are good, some days are bad. Those tilt days are bad. So if we can have a system in place, we can realistically kind of ignore the human factor because everything is basically automated, or it should be. You should be able to do your system. And if you're not able to, if you have a system and you can't do it, then we have other issues. We need to figure that out. And like this, the automation goes into like the emotional control that you see here. Systems need to be automated. You need to be a robot. Like Top Gun is in here. He's automated his trades to when he places the trade in, it does it for him. Everything trails, the stop losses, things like that. He doesn't have to do anything. And that is great because it takes the human factor just completely out of it, which is the main reason we lose because we know like trading's like what 20% psychological, 80% psychological, 20% um, TA. So like if you can get the TA down, that's cool. But if you can't get the rest of it down, you're going to fail in this industry. And I want you guys to be around for a long time. And if you guys see me trade, like I don't take a lot of trades, and like I cut pretty quick, and I like to let my runners run. So risk management, the main thing is like you need to have a plan getting into it. I don't care what your strategy is, you just have to have a strategy. If you're a Fibonacci trader, trade your fibs. If you're a J block trader like I am, trade your J blocks. If you want to use the market maker model, trade the market maker model. But no, like you have to have a plan before you get in. And that's why I write like my daily bias every day. If we're not hitting one of these levels on my daily bias, I'm not taking the trade. Or like if I know we're going to be range bound, I will just wait for the range to break because my risk management in my head, I don't want to risk the money in the range where I don't really know what price is going to do. So now that we have the plan, what do we do when we have the plan? You just do the plan. It should be as simple as just clicking the button. That's all it is. All it is. You should have your entries, your exits, your stop losses, and a backup plan. Like if something weird happens, like you should have everything already into it before you get into the play. You know, you don't want to just like, sometimes like we call them lottos. You don't want to just have a lotto every time because then you're gambling. So you don't have a system, you don't have a plan, you don't have anything. Like if you're just marketing in and you're going, oh, I hope it goes up, and then I'll sell when it goes up. That's not the plan. That's how you blow your account. Stop. Now, for me specifically, risk to reward ratio. A lot of people are different. Some people will hold for full BT and hold their stop loss and not touch it. I like to trim along the way because I think money is better than no money. My first trim better be about where my stop loss is. So like if I get that first trim, it's a 1-to-1. If my stop loss is 15 points, I want my trim to be up for 15 points. And then I always move my stop loss to break even after I hit PT1. Makes it risk free. I'm already a little bit green and I'm not going to lose money. Now, this last one, how many of you guys have a plan and then you get in the trade and you forget everything you just thought about? You just become stupid and you don't know what's going on and you just like start clicking buttons, all this kind of stuff. Yeah, right. I know it's a lot of you guys. It's me. I mean, I do it too sometimes. It is what it is. We are human in the first place. But there's a reason like this. I want to go back to my daily bias. This is why I write my daily bias every single night and every single morning. Because if I look at a trade and I want to take it, then I look at my daily bias and I don't have that number anywhere. Why am I going to take that trade? It's an emotional trade. It's something like this. There's no reason for the trade fundamentally. Maybe like small time frame TA, but like I trade the way I trade, and there's a reason for it, and I have success in it. Now, if I start not following my daily bias, that's when I start taking losses. And a big example for me is when I trade in the middle of zones. You guys see it all the time. I get antsy and I just get it in the middle, and then you know what? It comes right back to where I wanted it to almost every time. So this is why it's in red. Deviating from your plan introduces emotion because you did not plan for it. And this is a stressful thing, man. We're playing with real money. So like you got to stick to the plan. And then why even have a plan if you're just going to break it every time? It makes no sense. Now this is weird. This is a little weird because a lot of us are on prop firms and futures are strange. And normally, if we were playing equities, we don't want to risk more than 1% of our portfolio. But now I'm just going to use like 50K in as an example. So everybody, when you get into trading, you go into a prop firm and you go, holy crap, they're going to give me $50,000 as soon as I pass this account. I know I thought that. Did you guys think that too when you first started this? I literally thought they were going to put like $50,000 in an account after I passed this like $15 Apex eval. It's not the case. It's not real money, but your account is literally $2,000. It's not $50,000. Obviously, you know that real fast. And these prop firms, they give you these contracts that you can trade on purpose. I think like the first Apex account was 50K and I could do 10 minis. So like I'm trading like 4 minis on this account. And after like 30 seconds one time I heard like order filled. I'm like, what the hell is going on? Yeah, well, that's almost $200 a point. So like 10 points, you blow your account. So we need to be cognizant of how big our account actually is. I'm just going to keep using 50K, $2,000. If you had $2,000 of your own money, are you going to be trading minis? Hell no. I think you should not trade more than 5 micros on a 50K account. But that's something we could do a whole nother lesson on of sizing. But the main thing I want to say is like the ratio needs to be there. If you're on a 150K account, trade some minis. You're on a 200K account, trade some minis. If you're on a 50K account and you don't have a $1,000, $2,000, $3,000 buffer, you should not be slapping minis. Now this one is huge. How many people, when they first started trading, especially options, you buy a couple contracts, it goes the other way, What do? You buy two more. Now your average is a lot better. Instead of 200 bucks, your average is 100 bucks. You average down and you keep clicking that damn button until your average is almost where the price is, you know? But we don't have infinite money. We don't do this. I mean, if you have infinite money, technically you can average down forever, I guess. But that's not the case with these prop firms. That's not the case with your cash account that you have $1,000 in. I never recommend averaging to a losing position. Now, that doesn't mean never average into a position. Average into winners. Love that. Now, if you enter and you have a clear level where the market is shifting structure and your play is invalid, I'm okay with like layering into a position like 2, 2, 2, but that's part of the plan. You don't want to get emotional and say like, oh shit, I'm down 20 points. Like, okay, if I average in, then I'm only down 10 points. But you don't have a plan for that average. Did that this morning? Yeah, lucky one. Yeah, very lucky it went your way because it usually doesn't. So the main reason for this is like it's already a losing play. It might have already broken your strategy or whatever, but you just don't want to accept the fact that you lose. It's a thing. We don't want to lose, right? But now the play's dead, and now you're in double your position. So now every point it goes against you is double. That is how you blow your account. And the technical way to say this is it increases your risk exposure. You had your plan, and now you deviated from it, and now your risk is doubled. If it goes your way, you got lucky. You got really lucky. But if it doesn't go your way, like you're screwed. That's all it is. You're screwed, right? There's no real way going around it. So just I like to not average in ever. What the thing to do is you can cut it and you can take the same play again if it presents itself because it was part of your plan. It's part of your edge. Everybody should have an edge. We should know our win rate. Or you should at least know what works, what doesn't work for you, but you should like know your data. You should know, so you should know your plan and don't do it. Now the next one, stop losses. Who here be honest, who here enters a trade and doesn't put a stop loss and just watches the play? Be honest. I know there's got to be a couple people in here. You just get in and then you watch the play. Okay. Yeah. Maybe we don't do that anymore, guys. Maybe we don't do that. So the plan, you have a plan. Now, my plans are always like retest or continuations of a market maker model. Yeah, but when you do a market order, do you put a stop loss in as soon as you get filled? That's the main question. Because if you don't, you need to. So what I want to say is like you get in this play, there's a specific point on the chart where the play is dead, right? I like to call it a change of character or a break of structure, which basically means like it's not going to go your way anymore, even if you want it to. It's not going to go your way. So put your stop loss at an area where the market is shifting structure. It's no longer bullish, it's now bearish. That's where you cut your loss. And like I said, there's always another play. Always another play. Cut your losses, live to fight another day. If you don't have a stop loss, you're just straight up gambling. There's no other way around it. So this one, I'm gonna do a whole lesson on trading psychology, but I wanted to go into it just a little bit because it does go into risk management. I like to call this clear mind. How many of you guys have like went to sit down at your desk or your phone or whatever, gotten a trade, like you're in a fight with your girlfriend, boyfriend, partner, whatever, whatever it is, or like your job, you just got railed out, somebody yelled at you, and then you go to your desk and you go, I need to make some money. I want to take a trade. How many of you guys have done that? I know I have. I have a lot. And it's not good because if you go into trading without a clear mind, you're thinking of other things. It spills into your trading life. Like you need to have the day, at least that day or that whatever time you're trading, you need to have that under control because it spills over. I know for a fact, like I'll message the partners and Profit Pros. And if I say I have a fight with my wife or, I didn't get a good night's sleep or something, I'll ask them to take over the live trading or I'll do that because you guys have seen it when I'm not in a good mood and I live trade. I lose every damn time and it's just not worth it. That comes into capital preservation. You can't trade if you don't have money. And if you trade when you're not in a good mood or you don't have a clear mind, you're probably going to lose. And you know what? A lot of us are trying to win to make us feel better, to like cut out that outside noise. That's not the way it should work. Get your shit together and then go trade. Yeah, right, right. So yeah, get your shit together and then go trade. The market's not going anywhere. It's gonna be here. It's not going anywhere. This is a big one for me, and it took me a long time to realize this. If you win or lose, like take a break. Take a break. How many of you guys have taken a loss and then immediately just like gone from long to short and just flipped and then lost the second trade in a row? Or blown the account right after? I have. I know I have. I have a dog. I'll go walk my dog after almost every trade. It makes me win or lose, win or lose. If I lose, it makes me like it's a reset, mental reset. I come back, I kind of forget about the loss or the win, you know? Because how many times have you won a trade and you want to get right back in a trade? There's no reason to do that. Like, but get some coffee, do something, watch some TikTok, or do your actual job for a little bit instead of staring at charts all day. Do that, you know? Yeah, yeah, exactly. Like hit the Uno reverse button. No, I don't think you should do that. I think you should just take a break. And then this comes into the FOMO. FOMO is the worst, especially in Discord. If you hop on late and I'm sitting up here, I'm like, all right, we're up 50 points, like great play. We're killing it. And you're like, oh, I missed it. Maybe it'll go more. And then you get in, and then what do you know? It's like goes the other way immediately. So, like, if it's not part of your plan and you miss the trade, wait for the next trade. It's not, the market's not going anywhere. It is what it is. But chasing trades will lead to poor entries. And one of my tells for the tilt monster, as I call it, and the tilt monster is basically when you just start to throw all your rules out the window and do stupid things, is when I miss a trade, I'll start chasing or I'll move my stop loss, things like that. If I notice myself doing anything to damage my risk management, I'm out. I'm closing charts. I'll even say it like, oh, I feel it coming on. I'll be back for power or something like that. But identifying things that is not part of your plan or not part of your risk management schedule will help you avoid the tilt monster and avoid making really stupid decisions. So like everybody has different tells. I know a lot of your tells too. It's funny to see because I can tell when you're gonna mess up. But if you can identify your tells, when you start doing things you don't normally do, that's how you avoid the tilt monster. This is a big one on risk management. How many people saw some Instagram guy or saw something and it said, want to make an extra $500 a day? Join my Discord. Want to make $1,000 a day? Join my Discord. I mean, it's possible. Not at the beginning, I don't think, but it's very, very possible. I'm a big proponent of not setting profit targets, profit goals, point goals, anything like that, because every day is different. One day you might make 300% of what you want to make. The next day you make 10%, but it averages out and you make what you want to make. So like setting these profit targets will make you force trades, chase trades, not go according to your plan. And then what does that do? Your emotions get into it. And then you deviate from your plan because now you're emotional. Now you're emotional, right? So if I say I want to make $800, but I'm up 400, I'm like, oh, I really want to get that extra $400. Most of the time I end up losing it. How many times have you had guys have green days go red? Everybody here. If you don't raise your hand, you're full of shit. I'll tell you that right now. I do it sometimes, but if I'm up and I got yeah, right. If I'm up and I hit the play I wanted to and I hit my price target, I'm done. I'm done for the day, except for like power hour lottos or something like that, you know? Every day is going to be different. So every day is going to have a different profit target. Some days I size lighter, some days I size heavier. It's all according to the plan and how A plus I think my setup is. But then there's also, it creates pressure on yourself. Like say now you haven't taken a trade or like you're a little bit red, but your goal is $500. Now you have this pressure and it's like, say it's 2:30 p.m. The market's going to close in an hour and a half. Now you have this pressure. You're like, I need to hit a banger before I get off or like the day's a wash. No, you know what? I'd rather lose $50 than lose $500. Stick to the plan. This whole lesson is about just sticking to the damn plan, guys. This is a great quote. Money is a byproduct of proper risk management and trading plans, not the goal itself. Meaning, if you have your strategy, your plan, and your risk management in place, and you know that your edge is profitable, the money will follow. It's just a matter of scaling your account and doing it over and over and over and over and over. Daily target made me overtrade and I've blown fun. Exactly. Same thing with like trying to pass an evaluation in 1 day or 2 days. Stick to your plans, stick to your plans. But I want to say this again, money itself is a byproduct of proper risk management and trading plans, not the goal. The goal in trading is it's bullshit. The goal is to make some money. Let's be real. The goal is to make money. But the goal is to get good enough at your system where the money is it just comes because you did your job. It's no different than going to work. If you do your job, you get paid. Same here. You do your job, you get paid. You don't do your job at your job, you get fired. You don't do your job while trading, you lose all your fucking money. And we don't want to do that. We want to make money, not lose it. So we stick to the plan and the money follows. How many times have you guys seen me wait hours and hours for my plan to hit and then we get paid? That's what it's all about. Now, this isn't necessarily risk management, but I consider it part of managing my risk and managing my money. When to walk away. How many of you guys have a problem staying off charts and like not taking trades or just not thinking about trading? Because I remember when I first started, the first probably like 2-3 years, I had to be on the chart. Yeah, you do, dude. Yeah. All of you guys do. You guys are getting better, but yeah. I used to have to sit here for 8 hours. And I was full-time trading at this point. Like I didn't have a job or anything or any responsibilities, like no wife, no nothing. Like I would just sit here for no reason. Even if I could if I knew that the conditions weren't favorable. Actually, Eric, I'm gonna bring you as an example. Do you mind if I talk about you for a second, Eric? Okay. So Eric, I had a hard conversation with Eric one time because he was one of the first people that I met when I started the server. Blah 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 blah. He was having trouble, and I asked him to show me his chart, and like I looked and it was like 56 trades, whatever, and I'm like, why are you taking 56 trades, dude? Didn't you like have some kind of plan? He's like, yeah, but then I saw this and this and this. I'm like, why? Why are you doing this? Like, what's the point? And like learning to walk away is a very valuable skill. Even if you're a scalper or a holder or whatever, if you identify something where like you're not going to do a good job, why the hell do you keep doing it? And so like I had this talk with him, and I just said like, why don't you just limit it to like try 3 trades a day? Just try it, see what happens. And I think like by the next week, he had 5 green days and got a payout. And then the next month, it was like 90% winning days. Just because take the setup if it's there. If it's not there, go F off. And now you see him, he's here for like the first hour of the market, and then he's out of here. Dude doesn't even have a job anymore. He's out of here because he manages his risk. He hit his play he wanted to hit, and now he's gone. That's what trading is for. And we can do a whole lesson on like why trading gives you freedom or whatever, but that's what it's for. You come here, you click a button for an hour, and then you go touch grass, as we like to say. So, walking away. Now, you can walk away certain hours, but like I think these are the big points that we want to. Yeah, got your time back. Exactly. You got your 45 trades. Yeah, too much. But one of the big things for walking away is like recognizing your warning signs. For me, like I said, it's when I start chasing plays. If it missed my entry by 2 ticks and then pops 20 points, and then I want to get in, I just mark it in. Now I'm marketing in where like my first trim would be, rather than trimming and going break even as a risky trade. Now I'm just like pressing a button and hoping it works. Everybody has their own tells. Everybody has this, but what it all leads to the same things. You get emotional, then you start revenge trading, and then if you're red, you want to recover your losses. If you ever start thinking, I need to make this money back no matter how much you're down, you need to get away from the computer, your phone, whatever you need to do, you got to get away. And that leads me to implementing hard stops on your trading day. Now, Top Step X or Project X is great for this because you can literally lock it. If you feel it coming on, you can click close for session and it will not let you log back in for the rest of the day. Tradeovate, you can do it, but you can get by it. But there's like a lot of things like delete the app from your phone. You can always download it the next day. There's just a lot of things like don't go back in your office that day. Whatever you have to do to make you not be able to be on the computer. Now, I know a lot of us work remotely. That's tough. But you need to have the discipline to know to walk away. And I will tell you myself, I got so much more profitable when I did that because those days where I'm down $100, I want to make it back. Like I said, it's a lot easier. It's a lot better losing $100 than losing 1,000 or blowing your whole account because you can make that $100 back the next day, right? And then what happens after you do all that? Now, like you got to go back to work. You got to hang out with your family, and you're pissed off. Like it's just a complete spiral. So we want to avoid that. And I mentioned this, but just reset completely. Like literally, do anything you can do to avoid this stuff. Like you don't have to trade every day. Blah blah blah. If you feel this crap, like do this. Go take a walk. Throw your computer away. Go take a walk. You can buy another one tomorrow when you make $500, right? So like these are the key takeaways. And like this isn't rocket science, guys. It's very, very, very simple. Like always have your written plan. And I think your written plan, your trade should be based off the chart. They shouldn't be based off of dollars, points, anything like that. You should be playing the chart, your setups, your edge. Clear entries, clear exits, and position size determined probably on your account, most likely. But you need to have all this laid out before you even get into the like. Imagine you're alerting somebody, and like they ask like, "Oh, what did you get in this trade for?" You're like, "Oh, I just thought it was going to go up. I marketed it in." "Oh, when do you leave?" When I lose $500. That's so arbitrary. Like imagine you're alerting to somebody like entry here, stop loss here, take profit here. If you do that, it will sounds like a lot of people I know, Eric. But yeah, if you do that, like write your bias, write your plan, write your entries and exits, and I promise you trading will get much easier. Use these hard stop losses. The 1% rule, we're never going to worry about that because a lot of you aren't prop firms. But use hard stop losses. If it hits your stop, you're done. Don't move your stop. If you're in Project X or Top Step X, you can limit contract sizes and like have a daily loss and all those kind of things. Do not change it if the trade is going against you. You put it there for a reason. Do not change it. I know you can turn it off. Leave it there. But if you start moving your stop loss and all this stuff, you're done. You're cooked. The day is done. You're screwed. This is the biggest one. Emotional distance from trading. It should not be emotional. Yeah, we get fired up after we win a play. That's fine because it's awesome. But while we're in the trade, we should not be screaming, crying, any of this crap. Why am I throwing shade? Damn, called out. So yeah, but like take breaks, avoid the revenge trading, lock yourself out if you need to. Like, I don't know about you guys, but when I first got into trading, it was like my only hobby. Like I wouldn't do it. Like, but now if I notice something's off, I go to the gym. The gym is gotta be one of the best things ever. Because if you're feeling like shit or you're having a bad trading day or bad day in general, and you go lift or you go do your cardio or you do play a sport, you're gonna feel a lot better. And like you kind of reset for the day. Maybe you come back for the PM session and it gets better. Maybe if it doesn't, then you're done trading. But like that's a big thing for me is working out and stuff like that. You know? And another thing for me, I know some people do it and they have success with it, but don't average into losing positions unless you planned an early entry, a medium entry, and a like last ditch entry. Because for me, I have like my risky entry, my good entry, and then my hope I get filled entry. If you want to play those, is hyperventilating it okay? I don't know. But like cut your losses when the chart says to cut your losses. Don't average into losing positions. So you can always take another play. And one of the main things, guys, if you're new, if you're not new, Focus on the process. If you do the process properly, the money will follow. As long as your system is tested. That's the key thing. As long as your system is tested and shows that it works, follow that system and the money will follow. Vinny said a great thing on our podcast the other day about trading. He's like, do it right the first time so you don't have to do it again. I did it wrong like 7 times. I learned a million different strategies. I didn't focus on the psychology part. I focused on the money, all this stuff. I stepped back from my company before I should have. Then I had to go back to it because trading wasn't working out. I wasn't making any money. I had to go back and make some money. But focus on the process. This is one of those things where you could go for like 3 years and not make any money. But that 4th year, you can make hundreds of thousands of dollars if you do it right. So focus on the process. So that's all I got for risk management. It's not rocket science. It's just something you have to follow. Do any of you guys have any questions or anything that's troubling you or anything like that? So if you want to ask, like, now's your time. How long to become profitable, brother? It's different for everybody. My problem, why it took me 3+ years, is because I would bounce from Discord to Discord or Telegram to Telegram group, find one guy that I thought was good, realize it didn't vibe with me, or go find some groups that had zero value, like zero value. They didn't teach me anything. I was just taking plays, like all this stuff. But I think the general consensus is probably 3 years. My goal is to make it like a year or a year and a half. And if you actually follow systems, it can be very quick. It can be very quick. Something I've been doing is taking a pause, reciting a mantra, breathing, and recognize. Yeah, same. Like, take a step back from yourself and realize what's going on. A lot of scammers, but I think the general consensus is like 2 to 3 years. Some people I follow on like Twitter and stuff that are like rich as hell, making like 50 grand a day. Took 5 years, but you know what? They're so rich now that it doesn't matter. It was a learning process. Anybody have any other questions? That's one of those things where when it clicks, it clicks. It took me, I want to say 6 months from the time I learned it. And then I didn't get it at all. And then one day it was just like, it clicked and then I will never forget it. And I can see it with my eyes closed, basically. That's how I developed the J-block strategies from the market maker model. Okay, sizing. Yeah, I'll go over it real quick. I would not go over 5 micros at all on a 50K. Wouldn't go over 5 micros until you have at least a $3,000 buffer, and then you can go up to probably 7, 8, then 10. But I think 2 to 3 micros per $1,000 is the move. My favorite's the 50K because I have a solid risk management strategy. I'm not going to blow the 50K. If you can't follow your risk management strategy, I don't think you're ever going to succeed. Trading's not for everybody too. You guys got to realize that. But $2,000 drawdown on a 50K account is not a lot. So if you don't have proper risk management, you're going to fail. But like I think Eric was talking about it the other day. If you're sizing 3 micros, you have to lose 335 points to blow your account. Like that's a lot. So if you have decent risk management, you should not be blowing your account trading 3 to 5 micros, unless it's going to take a while. And like then it's not a psychological risk management trading rules thing. It's you need to figure out what the hell you're doing wrong trading wise. But yeah, guys, thanks for joining me, listening to me ramble. I will post this in the premium section. And if you guys do have any more questions, just ping me in the chat or whatever, and I'll be more than happy to answer anything you guys have. All right, yeah, guys. I don't even know what the market's doing, but let's see if we can maybe catch a trade in the chat. All right, take it easy, guys.